In this video, I want to talk about how to grow wealth with convertible bonds. We are highlighting the key benefits of investing in convertible bonds. In actual sense, we want to discuss the advantages of convertible bonds, in these regards. Number one here is potential for equity-like returns. In other words, convertible bonds give you the kind of returns you could obtain if you invest in the stock market. There's that equity-like returns. Convertible bonds provide bondholders the option to convert their bonds into share of issuing company. If the company's stock price appreciates significantly, investors can participate in the upsides by converting their bonds into equity. What we're talking about here is that you have that advantage of converting your bond into the stocks of the issuing company. As the issuing company does very well, the stock goes up and you end up gaining tremendously as a result. Number two is downside protection. While offering upside potential, convertible bonds also provide the security of fixed income instruments. Investors receive regular interest payments and have their principal protected as long as the issuer does not default. As long as the issuing company of this bond does not default, you have your regular coupon, your regular interest coming in, as well as the principal is well protected. At maturity, you get to collect your principal, as well as even the profit you've made regularly in time past. So your downside is kind of protected, and at the same time you have an advantage of getting regular steady income. Number three is lower risk compared to stocks. We can't compare the risk in bonds to stock. Actually, stock is far way riskier. Bond is a kind of fixed income instrument. It has a relatively lower level of risk, but stocks, we all know, fluctuates a lot, and though it gives a higher return, but is very relatively risky. Convertible bonds are generally less volatile than the underlying stock, offering a safer way to gain exposure to the company's potential growth. Number four is income generation. When it comes to income generation, like all traditional bonds, convertible bonds pay regular interest. They call it coupon, providing investors with a steady stream of income. If you want to prioritize income, over returns, you go for convertible bonds. Your income comes in, regularly, probably, annually or biannually. As long as the issuing company does very well, they don't default, then your income is guaranteed, while your capital is still intact, waiting for when you will get it back at maturity. Number five is diversification benefits. Diversification benefits. So in this regard, you discover that convertible bonds offer a hybrid of fixed income as well as equity characteristics, making them a valuable diversification tool in a given portfolio. There's something very important about this particular kind of bonds. Well, one is that they have the future of stocks, and they equally have the future of bonds. Future of stock in the sense that it could be converted to stocks, and that of bonds in the sense that you have regular income. So by so doing, that diversification is adequately taken care of. Number six is improved financial terms for issuers. Improved financial terms for issuers. From an issuer's perspective, convertible bonds often carry lower interest rates compared to traditional bonds, since the conversion feature compensates investors with potential equity upside. The matter here is that you see, although this class of bonds generally, pays lower coupon, lower interest than a traditional bond like a typical government bond. But that particular low interest payment is compensated by the fact that if you so wish, you can very easily convert your bond into the company stocks, particularly when the stock is doing very well. Okay, if the stock is on an upward swing, is about to rise or is rising, you could take advantage of that momentum, key in, and then you could profit from the rise of the company's shares in the market. Please subscribe to this channel and like this video if you've not done that. Number 7 is access to growing companies. Access to growing companies. That's number 7. Convertible bonds are frequently issued by growth-oriented companies that may not, yet pay dividends, on their stocks. This allows investors to participate in their growth indirectly. Discover that companies that issues convertible bonds, they are just like companies in their growth stage. New companies that are experiencing growth, and so you get to participate in that particular growth. When you convert the bond into stocks, you stand, to gain a lot from the fact that this company is growing tremendously compared to other companies in the market or compared to other companies in a sector or industry. So you have that access to, a growing company. Number 8 is potential for favorable tax treatments. Potential for favorable tax treatment. In some jurisdiction, in some part of the country, the income from convertible bonds may be taxed differently than capital gain, from stock conversion, potentially benefiting the investor. When you have your income from this bond, all right, this income, coming in is taxed at a lower rate compared to what you could compared to the tax rate that's obtainable if you incur capital gain. All right, if your investment happens to appreciate and you sell, the tax on that particular transaction is quite higher than what you will get from what's obtainable from your interest on this bond. There's that particular favorable tax advantage or tax treatment. Number 9 is liquidity advantage. Liquidity advantage. So in this regards, you discover that convertible bonds, tend to be more liquid than common stocks, of smaller emerging companies, providing investors with greater ease of entry and exit. So you can very easily, sell, dispose your bonds if you so wish before maturity. That liquidity is highly enhanced, as liquid as even common stocks, if not more than. So take into consideration this liquidity advantage. Number 10 is attractive risk-adjusted returns. Attractive risk-adjusted returns. By this particular concept, we mean that over time, convertible bonds have demonstrated the ability to deliver competitive risk-adjusted return, balancing potential growth with capital preservation. These two phenomena are very, very important in the sense that there's that capital growth, all right, and there's that capital preservation. Your capital is preserved, and at the same time, there's a likelihood of potential growth. If you convert your bond into stocks, you stand to gain from the growth of the company's share. While at the same time, if you want to still remain, if you still want to hold your bonds to maturity, of course, your capital is preserved. And so the benefits make convertible bonds. These benefits make convertible bonds, an appealing choice For investors looking for a balance between risk and reward, you want to show you can balance the risk as well as the reward. This particular instrument is the right candidate for you.